Welcome to Innovate, Disrupt, or Die, the podcast where innovation isn't just an ideal, it's a way of life. I'm your host and creator of the Innovate, Disrupt, or Die newsletter, Danny Nathan. Hello, and welcome back to another episode of Innovate, Disrupt, or Die, the podcast. This week, I have David Peterson with me. David, welcome. Thanks so much for joining us.
Thanks so much for having me.
Awesome. I'm looking forward to a great chat, David. I'm going to start off with sort of the easy question that I ask everybody. Tell me a little bit about yourself, what you do, how it relates to the world of innovation, and, why you're excited to be here.
Well, I have, I think, the best job in the world. So I'm Chief Innovation Officer for First National Bankers Bank, and we're headquartered in Baton Rouge, Louisiana. Now, we're a bank, but we're a correspondent bank, which means we only bank other banks. And so we deal with about 680 financial institutions around the southeastern United States, roughly where the SEC used to play football. And so we provide a whole range of services for these banks as they interact with all the rest of the banking world. So these are mostly smaller banks, community banks, think a couple of billion in assets and under. And my sole job is thinking about how F&BB gets more innovative, starting with creativity, coming up with ideas. How do we lower costs, increase revenue? How do we provide better service for our customers, so on and so forth? And then also I've started taking innovation directly to our bank. So now I'm going out and actually doing innovation workshops and speaking at conferences and writing and blogging and podcasting about innovation, specifically as it relates to financial services. It's ripe for innovation simply because a lot of what they do has been pretty traditionally unchanged, right, for many decades.
For the uninitiated amongst us, myself included, tell me a little bit more about what a banker's bank is and how it's differentiated from, the bank that I would walk into down the street.
Yeah, so if you think about a commercial bank, most banks are consumer or business or both oriented, right? So they have a bunch of consumer accounts, and that's how we interact with the bank, cashing checks, making deposits, transferring funds, doing bill pay. You would have access to things like online banking, mobile banking, the ATM, all of that kind of stuff. On the business side, you might have a similar set of products that a bank is offering to business customers, treasury, cash management. Certainly there's loans and all of that stuff. A banker's bank exists to provide a bank who is offering the very services that I just mentioned, who needs to get access to the rest of the financial services world. Think about a small bank. Let's say they're 150 million in assets in rural Mississippi. Now they still need to do business with Chase, Citi, Bank of America, Wells Fargo, Capital One. They still need to send and receive stuff from the Federal Reserve. They still need access to insurance, making investments, buying marketable securities and just a whole plethora of things. But because of their size, it may be difficult or expensive for them to directly interact with all of those different players. So what we do is sort of provide an intermediary services. They can have an account with us and they can do all of those transactions. Probably the biggest single thing is the Federal Reserve provides an account for any bank who wants one. But one of the biggest things that people don't realize is if you have an account at the Fed, you cannot be overdrawn in that account even for 1 second during the day. So think about this. If you're a small bank, let's say you have a customer that needs to send out a $500,000 wire, you have $250,000 in your Fed account, you got to put another $250,000 in there to send out the $500,000 wire, even though in an hour you're going to have $1 million wire coming in. So what the banker's bank does is say, hey, look, you're in and out of your account all day long. When you get to the end of the day, we settle up with you. You've got all the funds that you needed to have in your account to fund anything. And quite frankly, if you're short, we'll make you a loan. And that way your account will be at zero at the end of the day. So that's just a 20,000 foot overview of the role that a banker's bank would play.
Got it. I appreciate that. And I can tell this is not the first time you've been asked this question. You kind of nodded to the fact that financial services is an area that is ripe for innovation. I then presume that you are less focused on what me, the consumer, might want that is innovative for a bank and more focused on, as you described, what your client banks might want. So talk to me a bit about how that comes to life in your role.
Yeah, great question. So first of all, I've been actually involved in financial technology, what the industry might call fintech, since 1983, have stayed in this industry now for 42 plus years and always somehow involved in financial technology as we come forward now through 4 decades. the essential part of what banks do hasn't changed. That core, the essence of what keeps the accounting of these systems completely and totally unchanged. In fact, it wouldn't be a shock, perhaps, to some of your listeners to know that's still essentially the same programming that I was working on back in 1983
I
or
am not
85.
surprised.
Not surprised, right? So now around the edges. So as a correspondent bank, we don't have to have the things that you get from your bank. We don't have mobile banking. We don't have online banking. All of that is outside of the scope of what we have to provide directly. We are going to have to start doing some things differently in a way that we didn't between, say, 1985 and 2005, right? Versus 2005 to 2025. It's a big difference. And it really comes down to generations. The banks are going to have to make a change because their customers are changing.
I actually am interested in the kind of generational change because as you're pointing out the time periods that we're talking about, 1985 to call it 2005, and then the previous 20 years leading up to now, you're kind of defining the dividing line right around the time of smartphones and social media and sort of the
Right.
explosion of the general population's use of the internet. So yeah, I am curious kind of
Very
what the impact of that has
astute.
been.
Very astute, Danny. So 1999-ish is kind of the advent of the first real workable smartphone. And then it really didn't become sort of commercially great or whatever until probably 2009, right? So 1999, interestingly, is also the first year that you had an internet only bank. So Security First National Bank in Kentucky launched in 1999. So here's the real key point to this is that baby boomers, my behaviors is pretty much like my parents, right? So I'm banking the way that my parents bank using more
Yes.
current technology, but I adopted that. The Gen Xers also adopted. They kind of fell right in line. And in halfway between the millennials, they adopted more the banking of their parents, but the younger ones, and certainly the Gen Zs and the Gen Alphas that are coming, did not. And the one seminal difference, really the only difference, is the smartphone, the tablet. The ability for those kids when they were literally babies, they were developing a tactile and literally from a very early age an understanding of what the user experience was. Say a 3-year-old can tell you what's a good user experience, what's a bad user experience. Probably don't articulate it very well with English words, but they will not play a game that doesn't conform to their idea of how it should work, right? So now switch over to the banks. It's 2025. Yes, banks have online banking. Yes, banks have mobile banking. There's very little personalization. There's very, very little engagement. There's nothing particularly interesting or entertaining about
No, you go to your bank to do
doing
what
your
you need to
banking.
do and then you leave.
What baby boomers do, what Gen Xers do, and some older millennials is they figure out what they need to do to make technology to work for them. Not young millennials and not Gen Zs. They are not tech adopters. They are tech critics. They are very, very critical of apps that just don't work immediately the way that they should. And they're very quick to just abandon them. If you knew right now, 8 years from now, who your customers are going to be and what their expectations were, you'd start doing some things right now in preparation for that changeover of customers. And most banks just aren't paying attention to this. They're not thinking about it. And I think we've got 5 years, 8 years, maybe 12 years, right? Depending on the different markets and so forth. But 8 years sounds about right to me in terms of a cliff, meaning that all of these customers that are your largest depositors today, as they continue to age out, and you haven't done a very good job of bringing in younger customers, and your customer counts and deposit base is going to crash.
As you think about preparing for sort of the younger generation, what are some of the things that you're encouraging people to think about so that they can be better prepared for the future?
It's a great question. So innovation to me has to start with creativity. And maybe a lot of businesses don't really spend time to really foster creativity to try and make creativity happen, but if any business does, it's probably more than any bank would, right? So the banks are not sitting around going, "Hey, we need to make sure that people have time to think. How come we're not putting together these, brainstorming groups and letting them come up with ideas?" That's just not in in the fabric, if you will. That's not in the soul
Right.
of what a bank does. So what I started doing, the very first thing I did here at FNBB 3.5 years ago when I started this job is I did a series of innovation workshops. Everybody in the company, from the chairman of the board all the way down throughout the entire organization, in this workshop, the key thing that I'm trying to get them to get in their brain is number one, you must have a creative way of thinking about whatever your job is. Number two, everyone's job is to think creatively. So
Right.
we gotta start looking at how does every single person in the organization get empowered to either individually or as a group come up with creative ideas that can lead to innovation. Number three, creativity and innovation are not the same thing. So creativity is the start of all innovation, in my opinion. But creativity in of itself isn't innovation. Innovation is creativity expressed, manufacture, and consume. And what does that mean? So you come up with a creative idea. If I can't explain it to you or write it down, if I have an idea and I can't put it into some form that somebody else can look at it and go, David, I see what you mean. I have to be able to express that idea
Right.
as the start. Number two, I have to be able to manufacture it. Now, it might be a physical thing, like this pen. I got to actually build this, or it could be a process or a procedure, right? I have to be able to take whatever it is that I've documented and actually make it happen, build it
Hmm.
or put it into practice. And then, even if I can write it down and even if I can build it or create it, it has to have some utility. If I create something, if I create this pen and literally nobody ever wants to use this pen, then how innovative, right, could it really be? So consumed simply means that whatever it
Right.
is you've created gets some utility, that it gets put into use and it has some benefit, right, to the organization. I talk about how to do brainstorming correctly, that a lot of people have ideas, but they're very hesitant to raise their hand to give an
Right.
idea because they're afraid of what somebody else will think. They're afraid that they're going to get ridiculed. They're afraid that their idea is going to be viewed as crazy, right? So people have been trained to keep their hands at their sides and not offer up ideas simply because whoever was facilitating those meetings didn't do a very good job of soliciting
Right.
ideas. Ideas is a numbers business. So it's not about trying to come up with a good idea, just come up with ideas. And then later, after you start to sift through the ideas, you can figure out if any of these resonate. Do they make sense according to what your strategic plan is? Or maybe this component of this idea and this little piece of
Yep.
that idea now all of a sudden come together and right, you've got a whole new idea. But there has to be freedom. These people have to be given freedom to know that being creative and thinking is a part of their job. And it doesn't matter what their job is in the bank. And all you have to do is just kind of let it start small and just kind of get a little ball rolling, get a little, maybe it doesn't quite work in the first couple times you do it, but you press on, you make some iterations in how you're putting together innovation challenges, whatever. And eventually everybody figures out, yeah, this is a big deal for the bank. They're not just going to do something for 6 months and then stop. Now, how the bank's going to go forward. So little innovations lead to
Right.
medium-sized innovations, which lead to big innovations, and so it goes.
That's actually a great segue to my next question as well, David. So effectively, what you're describing, at least in my parlance, would be a culture of innovation. How do you establish the freedom to think creatively, to experiment, to try weird things, and ultimately to fail without the fear of repercussions? Is innovation a mandate within FNBB that has been handed down and that you are sort of carrying the mantle of? Or do you find that you have to work to convince other leaders within the organization of its value and explain where it comes to life?
Yeah, I would say it's neither of those things. It might be somewhere in
Okay.
between, right? It's not like a mantle passed down, but it's not like trying to, push a rope uphill. So what happened was about 4 years ago, maybe 6 months before I started, FNBB had gone through a whole process of sort of reevaluating its core values, and it came up with a new set of core values. And one of the core values they created was innovation. And so as they were going through and looking at all of the different things that they were doing to advance their core values, they realized they weren't really doing anything to advance innovation. It was a core value, but it wasn't nothing was actually happening right for it. So they knew from the senior executives that this is something that we should be doing. And I was given pretty much a free reign to try and work through. And, I tried a number of different things, and things have sort of settled in where I wind up getting involved in a number of different areas of the bank based on my previous expertise, where I can help them with my expertise in banking technology, for example.
Right.
But basically, people will come to me and say, "Hey, I got an idea," and we sit and talk through the idea, and it may or may not turn out to fruition, but everything gets a hearing, everything gets put on the table. But at the end of the day, what really has made the difference is FNBB updated its end of year evaluation. So you get to the end of the year and you do a self assessment for your boss, and you say, "Here's what I did," and the self assessment got changed to basically align with the core values. And so now everyone for their self assessment has to say, "Well, what did you do in 2024 that was innovative?" Right. So all you have to do is put innovation as a part of your annual review. And all of a sudden, people just decide, well, maybe it's in my best interest to be innovative. Right. And you mentioned another important word, failure, about how banks have to accept that if you're going to be innovative, there's going to be some failures. Right. I'm sitting in a room right now. Immediately off to my right are a whole bank of whiteboards. And then above there, it says this: innovation occurs if failure is an option.
Yes.
Innovation occurs if failure is an option. And so this is something that I've dealt with my whole career with banks. Banks, we're not in the mistake business. We don't want tellers to be out of balance 10 cents. And because of that culture, it makes it hard, even if a bank really wants to be more proactive with innovation, to kind of get there, because you have to accept the mistakes. You have to
Yes.
accept the failures. And so that's where banks have to make a change. You have a mostly empty branch. Get rid of some of those desks that nobody sits at and just put some chairs there and start holding classes. So when other people do happen to walk in, they're like, "Hey, what are those people doing?" It's like, "Yeah, we have classes here about how to use online banking, mobile banking, how to set up alerts, how to effectively use bill pay, how to protect yourself against malware, whatever." But now all of a sudden, maybe they have something akin to the Apple's Genius Bar that helps them get.
Mhm.
There's so many unbelievable ideas they could do, and they have the space to do it in their branches. They have the wherewithal to do it in their online technology. They just are slow to accept that this is something that would be strategic for them to do. You don't have to get it all right out of the jump, but you do have to have the commitment that you're going to get it right, whatever you need to do to iterate
Right.
here or there. But don't give up. Banks give up too quick. They try something, they say, "Well, we tried that," and we give up.
I
And
don't
it's
think that's
it's
limited to
terrible.
banks, David.
Maybe not. Yeah, yeah. My experience is with banks and financial services, and I don't know why. I think somehow some distribution firm or somebody who runs a warehouse, somebody who runs a retail clothing store would be more innovative. But maybe it's just the same. Maybe
Well,
banks aren't as
I
hard,
think everybody's
aren't as
got their
back.
own little barriers that they need to overcome. So I'm interested, David, how much of your time is spent considering what innovation would look like for FNBB versus for your customers? Because as you're talking, you're describing things that could happen in a branch office, things that I envision being more consumer
Mhm.
facing as opposed to what you've described in terms of what FNBB is focused on.
Yeah.
So where does that kind of dividing line fall for you?
Yeah, it's not hard and fast, but I say it's probably 50-50, right? I probably spend 50% of my time doing
Okay.
things that are very specific to FNBB, and 50% of my time doing things that are much more specific to our customers. But here's the rub. We have, like I said, about 680 customers. We're not getting very many more. And the reason why I say that is that the environment for new banks to spring up now is not very good, right? Throughout
Sure.
all of that whole southeastern area, over a year's time, you might get 2 or 3 banks, right, that start, and you might get 5 banks or 8 banks or 10 banks that either generally not fail, but merge with other banks or get bought out by other banks. So when a larger bank buys one of our customers, then pretty soon we wind up losing the majority of all of that business, because that other bank is big enough to have its own account at the Fed to do a lot of the things for itself that we would normally do, right? So keeping a lot of community banks is in our inherent interest as FNBB. We need to have those banks as customers because we can't really expand. So we can either sell a lot more products, come up with more products to sell to a shrinking base, Or at the very least, we need to try, and everything that I do that tries to help these banks be more innovative all has the end game of keeping them in business as an independent bank. If in fact they really do get creative and they come up with innovations and they start really becoming more relevant to younger customers, there's a pretty good chance that in that 8-year, 10-year, 12-year time frame, they're still going to be around. They're still going to be a customer of ours. So even though, kind of the absolute maybe 50-50, all of it at the end of the day comes back to the benefit of FNBB.
Interesting. David, you've talked a lot about process and education. Does any of your work sort of spill over into the product innovation space? Are you thinking about new products and services that you could create to better serve your customer banks? And if so, what does that process look like for you and how do those come to life?
Yeah. So FNBB is not a technology company in the sense that we have, a huge rooms of programmers and quality assurance people, technical people. We outsource a lot of the technology that we get to other third party companies. So one of the things, just to give you one example of a new service that we rolled out 18 months ago. We have I think July to 2023 was when FedNow, the faster payment or instant payment service from the Federal Reserve, was released. There was already a service from the clearinghouse competitor to the Fed a few years before that called RTP, or real time payments. So now this is truly a new rail where I need to send money to you, and my bank is a FedNow bank, your bank is a FedNow bank, and I can say, okay, I'm paying Danny $500 and it's in your account in seconds. So FNBB and a lot of other bankers banks and other entities, banking associations, lobbied the Fed hard to get them to do Fed Now, because we didn't want the clearinghouse, which is owned by the largest banks in the United States, to kind of have a monopoly on instant payments, right? So the Fed said, okay, and they built it and it's out there and available. So what we did is we said, look, how are these community banks going to consume this? And we came up with a service that we call Instant Pay. Miraculous name, right? Instant Pay. And so we basically are giving all of our banks the ability to get through us a service that gives them the capability of both send and receive settlement of the FedNow and or RTP service, but they're doing it in a way that still works with their current core, but then they can move it and go, if they move to another core, they would be able to simply change the API that's talking to core A and move it over to core B. And it would be very cost effective, whatever, for them to do that. So that product, the ability to come up with the idea of what that should be, to be able to document it, to express it, and then work with that vendor partner to build it. And now we've got live customers out on it. So that's a great example of a new service. We didn't build the service. We came up with the idea. We documented it, sort of designed what it needed to do, worked with a vendor partner, and now have a service that we're actually offering out there in the marketplace. I'm starting to do the same thing right now with AI. So of course, Gen AI has exploded. So a lot of times I'm talking about here's what you need to think about. Here's why you don't need to stick your head in the sand and pretend like this isn't a tool that's worth using. But at the same
Right.
time, you have to be very careful about the safeguards that it's got to be put into a position where it can't hallucinate. So I'm developing a training program right now, again, with a third party that covers a great many things for all of everybody within FNBB. Will wind up being able to take this AI training class to kind of get them up to speed, to understand how it can be used, proper use of it. What are the misuses that we don't want to do? How do you avoid, hallucinations and all of these kinds of things? And so I'm really excited that I think all of these banks would probably consume that type of training from FNBB if we were to offer that modules and let their employees take it as well. So those are things that really aren't specific to like processing a transaction, sending a wire, buying and selling Fed funds, et cetera. But it's still, I think, important services that a bank needs, and we're going to be able to offer to them, just like we did with Instant Pay, at a price point that's cheaper than what they can get it before. So again, whatever's hard, we're trying to make it easy. Whatever's expensive, we're trying to make it cost effective.
David, AI is a really interesting example in the context of what we're talking about. We started this conversation by nodding towards the kind of shift that happened around mobile, for example, and there's a lot of folks that would argue that the current shift or new pillar that we're sitting on of AI is going to have every bit as much of an impact. Given what you're seeing and some of the watchouts around, hallucinations and how to structure queries and things. How long do you think it's going to take before banks that are the type that are your customers have adopted AI fully? And I don't even know what fully means, to be frank, but like,
Yeah.
how long until they're actually using it and we have
Yeah.
overcome the initial problems that you're describing?
Yeah, so they're starting to wake up to it. So we got to understand that AI, just regular AI, machine learning AI, has been around for decades and decades. There's nothing particularly special about AI. What we're talking about is generative AI, and generative AI, it's a large language model. It's trying to take in all of the internet or whatever it can get its hands on, so that it can have this widest possible framework of being able to respond to a chat. Well, in a banking world, that isn't necessarily desirable, particularly if you talk about the kind of applications where, for example, a loan department wants to be able to have people ask questions that get answered only from looking at loan policies, loan procedures, loan regulations, credit underwriting, whatever. So now what you have is small language models, a model that says, instead of you having access to everything, we're going to let you look at only these documents that we've uploaded. And when you ask your queries and when you're getting responses, it's only going to come from this information that we've uploaded. There's companies out there now that are starting to add AI, generative AI into their text. Personally, as we were talking about generationally, I think that younger people are more likely to interact with this at a time and place of their choosing, with whatever form factor they happen to have,
Right.
rather than going into the bank, rather than calling on the phone. And I think the form factor that I like is this idea that a avatar, a human form, pops up on their phone. They call it up almost like Siri, and they can have a conversation with it about something they're trying to do with their account. And it can even go so far as, I could be sitting there in a Target. I'm looking at this 80-inch flat screen TV, right, that I'm going to use to play Xbox. And I'm sitting there looking at it, and I was, well, that one's $350. And then the little Ask Jeeves like butler comes up on my phone and says, hey David, just so you know, if you buy that flat screen TV for $350, but don't make another deposit in your account before you get your next payday, you're going to overdraw. So there's a lot of things that, if we think about a bank and how banks really kind of provide the information about what has happened, but they could be providing wisdom about what could, or how to avoid bad things from happening in the future. Those are things that I think younger people, when they have access to that, they're going to think differently about what it means to have a relationship with a bank.
Right. And they're
And
going to
that's,
begin
yeah.
to expect those types of
That's
experiences
right.
that you've
That's
described.
right.
Yeah,
Now, it's not
absolutely.
ready. The technology's not ready yet, but I've been experimenting with an agent that I call Buckley. I'll tell you this quick story. I'm going to go demo Buckley on stage for all of these bankers, all these CEOs and board members and all that. And so I'm showing my grandson, Liam, Buckley the day before, and I was showing him how you could just type out or just, click the little microphone and talk to him and ask him questions. And I said, well, here, Liam, you ask him a question. And Liam clicks on the microphone and says, give me investment advice in the style of Snoop Dogg.
Yep.
While Buckley is kind of doing his little thinking thing, my grandson says, if he doesn't use the words for shizzle, if the shizzle is not part of this answer, then I'm done. And so now I've given this guy a British voice because, I don't know, somehow I think a British voice somehow sounds like super intelligent or whatever. He came back, he's like, for shizzle, you need to get your green together and start a new investment, like pulling up coconuts and he did the whole thing, had this whole perfect investment advice, and you could almost hear, Snoop Dogg saying it. So, I played it. I actually used that example in the session the next day with the bankers. And I said, look, it doesn't matter what you think about its ability to do that.
Right.
When you get like my grandson, if he actually had that as live, as real, he would be sending that link to his friend saying, you got to check this out. You
Yeah.
got to check
Yeah.
this out.
Listen to
This is
this. It's
really cool.
hilarious.
Exactly. And I said, look, this is exactly what we should be trying to figure out how to do, is to make banking so cool for these younger folks that they are literally telling their friends, you got to watch this, you got to hear this, you got to see this.
Yeah.
And that's the effort.
Absolutely. Well, David, this has been fascinating. I love hearing how you're applying technology and innovation thinking into the world of banking, because I agree, having worked in financial services a reasonable bit, certainly not to your extent, I have seen the need and the appetite for it. If folks want to reach out, David, and kind of pick your brain, Is that okay? And if so, where should they
Sure.
reach out to you?
Yeah, they can reach me at dpeterson, DPETERSON, at bankers-bank.com. But you can also find me online. I'm on LinkedIn as DLP Speaks, and I have a lot of content out there. I do have an innovation-driven growth podcast. So I've got
Oh,
maybe
awesome.
60 episodes or so out there, and I talk about general innovation, but most of it has to do with financial services because that's the industry that I work in. And again, that whole podcast is really focused on enterprise wide. How do you figure out how to get everybody innovating, not just that department over there, but
Right.
everybody innovating. Any of those ways are ways that they can connect with me, and I would love to hear from any of your listeners. If anybody has questions like, "Oh, we've tried this, when it didn't work," or "Hey, I've got this roadblock, I've got this person who's in authority over me, and they don't want to do any innovation.
Right.
What can I do?" Those are the kinds of questions that I field all the time from our customers and students that I teach.
Awesome. Well, David, it has been an absolute pleasure. Thank you so much for taking the time to join us, and looking forward to checking out your podcast.
Awesome. And Danny, I just got to tell you, this Innovate, Disrupt or Die, love the concept.
Awesome. Thank you so much, David.
Take care.
That's it for today. Thanks for tuning in to Innovate, Disrupt or Die, the podcast. Join us again for our next episode, and don't forget to subscribe at innovatedisruptordie.com. That's all, folks.